Hi and welcome to this week's video report. It is for the FX majors and the dollar index for the week 1st of April 2019. We're still seeing some pretty choppy, volatile trading. We're going to look at the dollar index first to try and get a bias on the index, then break down through the currencies all the way into euro yen to highlight what chart formations we're seeing this week and what we're looking basically for on the long-term picture for these major currency pairs. So the first chart I'm going to start off with is the dollar index weekly chart. Here we can see a bearish 5-wave Elliott wave formation to the downside. We've then seen this pretty choppy, volatile trading in the index for the last 32 weeks. That looks to be forming an ending wedge pattern. Now levels close to the 61.8% Fibonacci at 97.86 continue to attract selling, but this trendline support continues to attract buying as well. So a pretty mixed picture really on the weekly chart. We can see that the MACD is basically moving to the side, highlighting that we're not really trending at the moment as far as this time frame is concerned. However, going to the 4-hour chart, last impulse move to the downside reached levels close to the 261.8% Fibonacci at 95.64, and then we've seen quite an impulsive move to the upside, but it has been pretty mixed, pretty volatile, and we look to be forming an ending wedge pattern. Now we really need to see a break to the downside to confirm this formation. That's going to be around about 97, the figure, which is also this previous swing low. So what we could see is a breakout and then area confluence, a move to the upside, maybe a retest of the breakout level, and then the measured move target, if we do break that wedge formation, is down here at 95.76. If we break to the upside, then again the focus, I believe, will move back to this Fibonacci level and possibly even a push through to the top of the wedge. But the long-term picture, as long as this wedge formation holds on the weekly chart, is to the downside. So we're expecting still mixed, volatile trading, and we're trying to catch basically those dollar moves lower to try and get the big picture move to the downside. So breaking that bias back onto the FX majors, and we'll go to the weekly chart first. And there's a lot of indications here really that this move lower in euro dollar is finished. We got levels close to the 61.8% Fibonacci finding buyers. That's after a bullish Elliott wave count, so that would dictate that this whole move lower to the downside is mixed and volatile and basically corrective. Now if we go to the daily chart, we've got another bullish formation, which is this ending wedge pattern, a break of the wedge, and the measured move target is 118.17. However, this last attempt to break out failed, and we've had a pretty sustained move lower. However, again, just looking at another picture for euro dollar, possibility of a head and shoulders or a reverse head and shoulders forming. Left shoulder, head, right shoulder here. Really got to break the neckline at 114.63 to confirm the outlook. We have got correction counts. We haven't got exhaustion counts to the downside yet in euro dollar. So there might be scope for still some mild selling, but we are still looking for that to be limited. If we look to the 4-hour chart, again, we've got a Fibonacci confluence area. Can't really make any symmetrical patterns out of this, such as a Gartley or a bat. But again, a bullish outside bar sort of holds a mild upward bias, but we really want to see that impulsive move with the dollar moving to the downside to get this next move higher. And one thing that we should note, as long as we don't make a lower low, so in other words, this swing low makes a higher low, then it would dictate this next move higher will be impulsive and will also be the third wave in a shorter term Elliott wave formation, if you like. If we just put a fib on here, it lines up pretty well, these sort of confluence areas. So previous areas of support and resistance, areas that have been pivotal and then moving up here to possibly break through the top of that wedge target. So cable is not so much as a dollar bar. So obviously got a hell of a lot going on in the UK at the moment. We were quite lucky on Friday to get an intraday short trade just off the top of this wedge formation. So basically the daily chart is broken a wedge formation to the downside. That would dictate that we move down to at least this level, 127.75. Beginning of next week, we've got bespoke resistance at 131.56, so it's up here. So we're just, doji style candle. It's not exactly bearish. So maybe another retest of this wedge formation. And we've got to remember that the big picture for cable is still bullish. Okay, we've got this wedge formation. We've got a bullish outside month posted in January. We've also got what we call a perfected 9 as far as DMARC is concerned, and they often indicate the end of a trend or at least a decent correction to the upside. So the long-term picture is still bullish. So pretty hard to get a flow, if you like, on cable at the moment, and we're just going to play it intraday for the time being. Dollar Swiss, and this is one that I quite like over the long and medium term. If we look to this chart, we've got an ending wedge pattern, a break of the trendline support, and the measured move targets down here, which is around about 91.90 to 98. I think that's out of line a little bit. About 98.50 is trendline support. It would also be a lower low, so that would dictate that this will be the third wave. If we go to a shorter time frame, and this is a time frame that I really do like going into this week at least, is dollar Swiss 4 hours, 5-wave count to the downside. It is impulsive, it's quick, it's aggressive. This move up is mixed, volatile, choppy. An ABCD formation I don't think has quite played out yet. If I just go to my indicators, bespoke indicated 99.80 is our bespoke resistance, and then we've got this trend line resistance coming in at 99.83, and we've got the 38.2% Fibonacci pullback level at 99.83. So those sort of three factors really highlight for me that there should be limited buying in dollar Swiss. We're going to try and play that one to the downside early on next week. Dollar yen, daily chart expanding wedge. Let's just show that first. Expanding wedge has an eventual bias to break to the upside. This last move, yes, it is. We are starting to see higher highs and higher lows, but it's anything but impulsive. We haven't got bespoke support until 109.68, and we did miss that on the last move lower. So I'm wondering whether or not we're just going to get one more move to the downside before we get an impulsive breakout. And if you look here, just trying to sort of highlight where the wave formations could be, a break down to that level would still hold a bullish Elliott wave formation, because we wouldn't breach the top of wave 1, which is at 109.10. Any move through there, I would have to rethink the whole of this count. So at the moment we're mildly bullish, but I still think there's scope for a move to the downside before we break that wedge pattern higher. And again, dollar CAD, I think it's a very favourable currency pair going into next week for trying to pay dollar shorts, but not immediately. Okay, this is that sharp impulse move to the downside. Commodity currencies often will play out to the 423.6% extension level. Some say that smart money trades commodities and they react first. So Aussie dollar and dollar CAD are the first dollar currency based majors to really take the lead in dollar moves, and that would sort of highlight this move in dollar CAD. So we've had that impulsive move to the downside. 423.6% is located here, which is at 133.20. Now we've got some bespoke support at 133.15. So for us, the call isn't really to sell at the market, but more to sell on rallies. We've got 133.82 and 133.98 as bespoke resistance levels going into this week. If we look to the daily chart, it's a wedge pattern, which has a bias to break to the downside. 133.23 is the support level, very close to that 423.6% extension level and that bespoke support. So scope for a bounce off the trend of higher lows, and then using that bounce to basically try and get short in dollar CAD. I don't think we're going to see a more aggressive move to the upside. I've just looked at the docket for economic releases next week, and we're pretty thin on the ground of Canadian releases. That was last week. We are really dollar based this week. In fact, let's just have a quick look and highlight what's going on with regards to economic releases. So basically Monday we got some manufacturing figures out of China overnight. We've got the CPI consumer price index from the Eurozone on Monday, and then we've got US retail sales and US ISM manufacturing figures. So some pretty sort of middle to high docket releases. Tuesday, RBA interest rate decision could be very interesting. That Australian dollar is looking pretty bullish at the moment. And then we've got non-defense capital good orders, durable good orders from the US that day. Wednesday, pretty light releases. A lot of PMI figures tend to normally result in pretty choppy trading, to be perfectly honest, on Wednesday. And then Thursday again, nothing that you'd really see would rock the boat. Initial claims coming out of the US. And then Friday, of course, we've got the non-farm payroll. So there's a lot to look at, and we've also got the unemployment rate actually out of Canada on Friday. I can't really see, just going back to this dollar index, I can't really see, considering this is an intraday chart, I can't really see the dollar being able to hold inside this formation for 4 days. But we'll wait and see. I'm wondering whether or not something else might push the dollar to the downside as opposed to a scheduled release. So let's get back to chart formations. Aussie dollar weekly chart, 5-wave count completed. Inverted hammer, also a bullish outside candle, highlights the base basically in Aussie dollar. This whole move to the downside has been really mixed and volatile. Intraday trading has been pretty hard to find decent entry levels. I'm wondering whether now we're sort of forming some sort of pretty messy disjointed head and shoulders pattern. We haven't got bespoke support until 70.13. If we break this trend of lower highs, then the sell-off is probably completed. However, this is the preferred area. I'm wondering if that might trigger with the RBA interest rate decision next week. Euro sterling, let's go all the way out here to the monthly chart. Looks like a bullish Elliott wave count, a wedge pattern broken. This would be the measured move target for the wedge, which is 80, about 83 the figure. We have retested once this wedge formation, but you've got to remember these are inside waves now. So these inside waves, they can be produced in 3-wave patterns or 5-wave patterns. They have a tendency excuse me, to be extremely mixed, extremely volatile. So even though we're saying yes, ABC, we should be looking lower. This inside leg is probably going to be made up of 3 legs as well. So we've got to be careful of inside formations, and I'm just highlighting that here. So choppy move to the downside. Again, choppy move to the downside. This inside leg again being made of 3 waves. We haven't got bespoke support until 84.60, and then even then we're only looking for a correction really to the upside before that longer term picture completes. Sort of marries in, doesn't it, with volatility in the UK at the moment and sterling. basically a complete mess in the Parliament. Here is the daily chart. Let's just put this measuring tool on. Now that's nearly a month's worth of, well, it is a month's worth of trading, isn't it? Where we've seen mixed and volatile trading. If I put an RSI on there, it's just going to hover around the 50 mark, and that highlights that we're non-trending. You've got a possibility of a double bottom formation here. Maybe we've just stopped short of our bespoke support. A break of this level would dictate a higher correction to the upside. But again, sort of 84.60 is our favoured area to the downside. Big picture. There is no big picture really, in not that I can see anyway, in euro yen at the moment. This whole move lower looks pretty mixed, volatile. It's in 3 waves. Could this be? This can't be counted as a 5-wave pattern because it overlays to the top, to the upside. Even going out to sort of higher time frames or trying to squeeze more information into this chart, it's pretty hard to see any patterns really that dictate the long-term picture for euro yen. If we go to this time frame, we get a slightly bullish count. So basically, mixed volatile trading to the upside. This could be seen as an expanding wedge formation. So prices widens, then breaks, eventually breaks to the downside. That would dictate that the measured move target's down here. However, levels close to the 61.8% Fibonacci at 120.16 found buyers, and then this reverse trend line, or levels close to the reverse trend line, found sellers. So all we're doing really at the moment is trying to play intraday trades and play our bespoke levels. Now, sorry, wrong chart. Daily chart, we tried to get long of euro yen on an ABCD formation. I think we missed by about 5 ticks last week. You know, last 5 days again mixed price action. There's no trend in here. I think there's a good scope for still reaching that level, which is around about 123.60. And going back to correlation, and you know, we've got to think about correlation, especially when we get into a lot of the cross currencies. Is there scope for a move lower still in euro? So we look at euro dollar, euro Swiss. Yes. So that would dictate that there's still scope for a move lower in euro yen. What about dollar yen? What's the bias in dollar yen? Well, again, the scope still for a move to the downside. So really, we're expecting intraday trading to be mixed and volatile, but trying to keep a focus on that big picture. And the big picture, just using correlation, is for euro yen to move higher. Obviously, if we've got euro dollar and dollar yen correct. So we're still looking to buy into dips. Okay, I hope you found that educational, and good luck this week, and we'll speak to you again soon. Okay, many thanks.